So welcome to the Desk Trading Intentions Survey 2020. I'm Dan Barnes, the Editorial Director at Markets Media Europe. That's a picture of me responding to the news that my children will be at home next week. We have today for you the result of the Trading Intentions Survey, in which we ask buy-side traders 8 questions. The questions are listed there. I won't read through them, but they're designed to build up an understanding of the way in which buy-side traders interact with the market. So that's pre-trade data, the interfaces they use to post orders, and the trading venues that they use, all in the corporate bond space. This year we had 55 asset management firms, including the majority of the top 50 by assets under management responding. That's almost double the sample size that we had from last year, and that does have some impact on the questions which we, or I'll say on the responses we got back, in the sense that the increased sample size led to a more diverse range of asset managers that we spoke to. Okay, the universe we're looking at are 61 platforms. So that's pre-trade data sources, including trading venues that people check, the trading interfaces themselves, so that's the interfaces for the trading venues, and also order and execution management systems. And then finally, the trading venues where people actually execute trades on corporate bonds. We had a number of new platforms in this year, including Katana and BondClick as pre-trade data sources. And this year, we actually had a much more detailed analysis of the market by asking several questions around the way that OMSs and EMSs we use and trading venues we use, particularly in terms of trading protocols. Now, as I mentioned, there are 61 platforms out there. On average, buy-side traders today use use around 4 pre-trade data sources, 5 GUIs, that's including 1 EMS or OMS usually, and 4 trading platform GUIs, and slightly more, between 4 and 5 trading venues that they execute trades on. Almost everybody has at least 2 electronic trading venues. Only 1 out of the 55 participants had only 1. Okay, pre-trade data sources. So what you're looking at there is an analysis of the total users of pre-trade data sources this year, that's in blue. Those users who classify themselves as major users of those sources, that's in red. And then the total users from last year, 2019, in green, and the major users in purple. Now, the first thing to note here is that most pre-trade data sources people use are connected to a trading venue. Bloomberg, Market Access, Tradeweb, all highly up there. Second thing to notice is that the amount of people who are major users of Bloomberg as a pre-trade data tool is enormous. 55% of traders are major users of that. It's also worth noting that where we had people who said they were only using 1 pre-trade data source, that was almost exclusively Bloomberg. So if you only have 1, Bloomberg is the one. Clearly, market access with both Trax and the Composite Plus pre-trade source are both proving very useful for traders, as is Tradeweb's data. Interestingly, here we see streamed prices from dealers being used pre-trade. Now, I would note that because we included trading venues for the first time this year, Tradeweb and streamed prices from dealers don't have any data for previous years. That's not because they suddenly jumped up in use, it's because we didn't collect data on them last year, just to clarify that. It's also worth noting, I think, that the use of proprietary liquidity aggregation platforms has dropped off slightly. Neptune's dropped off slightly, but it's still, in terms of its overall use, 20% of traders are major users of Neptune, and it has around a 30% market share in terms of number of traders who use it. Okay, now I'm just going to check how we're doing on the polling. Okay, we've had a number of votes for that. So far, 67% of people have said that they have increased their appetite for more efficient electronic trading as a result of recent market volatility. That's good to know. Okay. I'm going to end that and move on to the next poll. But just before I do, I'm just going to finish the discussion here on pre-trade data sources. If we look at the next chart, this is asking buy-side traders which platforms they're planning to use for pre-trade data sources. What we can see here is that market access, including Trax and Composite Plus, has a 13% share of traders who are planning to use it. So if we just look back at where it is at the moment, they've already got 62% market share. So there's a good number of traders who are planning to move on to market access as a platform. Just behind that is Neptune. Again, Neptune's been doing very well with traders and has a large number of major users amongst buy-side traders. And clearly there's appetite for more firms to come on board. So that's interesting. Neptune is the only standalone pre-trade data source from what we call the first generation of pre-trade data sources that is at all successful. The others, unfortunately, have not proven so. If we just look along the line, the let's see, is that 7th or 8th line there is Alchemy, which currently has 2% of people planning to use it. That's down from 14% last year. So it's suffered a considerable drop-off in terms of both the number of users it's had and planned users this year. Okay, then finally, we also ask buy-side traders which platforms they're confident that they're going to be using in 2020, 2022, and 2025. So what we're seeing here is that over the short term, the big platforms that we expect, Bloomberg, Market Access, Neptune, firms, they have a lot of confidence in those. That continues over the next 5 years. Increasingly, people expect to be using proprietary pre-trade data sources and increasingly streamed prices from dealers as well. Now, I'm just going to, at that point, just note, do we have any questions? If anyone wants to put their hand up to ask a question, please feel free. Okay, I've got a few points from people saying that they can't see the polls. Clearly some people can. Okay. Now I'm not sure exactly why people aren't seeing that. I'm afraid I'll have to just run with the people that can see us at the moment. So I'm just going to launch polling for the second question. Which part of the investment process has been most sorely tested in the last week? And the questions are, or the options are, trading process, investment choices, counterparty support, market structure, or the regulatory framework. Okay, now while that's going on, I don't think I'm seeing any questions from anybody at the moment. Thanks, David Griffiths. The poll is a pop-up, just to let you all know. Okay, so I'm going to move on with the presentation now. So next, we're going to look at market interfaces, including execution management systems and order management systems that buy-side traders use. So on average, buy-side traders have around 5 interfaces that they use, with some traders even having 9 at the top end. For those, typically, we're only looking at one order or execution management system. The rest of those interfaces are market platforms. The most interesting thing, I think, well, for me this is the most interesting, was that the most commonly used market interface for trading is Bloomberg Message. 75% of traders use Bloomberg Message, 44% are major users of it as an interface for trading. Perhaps that's not surprising in an over-the-counter market where negotiation is important, but interesting nevertheless. Clearly, market access is second most popular, followed then by Bloomberg's order and execution management systems, that's TSOX and its AIM tools. Notably, TradeWeb and LiquidNet here, in terms of their interfaces, are equally popular. That doesn't necessarily translate into the amount of trade usage they get. We'll move on to trading platforms next, trading venues. But it's interesting to see that they do have a similar demographic in terms of or audience share in terms of their interfaces. Again, UBS Bondport's up there very strongly, as we expect from Bondport. That's been a solid contender for a number of years. And TradeWeb China Bond Connect. has really taken off. So that's been onboarded too. Amongst the execution and order management systems, we have Charles River and BlackRock Aladdin as seconds to Bloomberg's. Notice that both Charles River and BlackRock Aladdin have a very high number of major users. So for Charles River, in blue you can see, and they are somewhere around 7th or 8th along the chart there. In blue you can see their total number of users, 16%, and in red you can see how many users consider themselves major users, and that's 11%. So that's 2/3 of their users are major users. For BlackRock Aladdin, who have 13% of traders using them, all of those traders are major users of BlackRock Aladdin. So as tools, they're proving very useful for firms where they have onboarded them. It's also worth noting that with 29 GUIs being used today, there's a lot of platforms we weren't able to include in this chart just due to size restrictions. So that's other EMS and OMS providers, several bank GUIs, and major trading venues. Next, we're going to look at which ones. Hold on, we've got a question there. So Stuart, I am going to allow you to talk to ask your question. Stuart Shearer, do you want to ask your question?
Sure. Hi, Dan. Just to confirm you can hear me?
Yep, I can hear you. That's great.
Right. The question, my observation now, I was surprised how low streaming prices were. And just to clarify, are those prices coming through a platform or are they direct to a client? And then secondly, are they firm or indicative? And is it the latter because they're so low? Just have you got any more context on the streaming prices? Thank you.
No problem at all. And thanks very much for that question. So for streaming prices, we were looking at direct streaming prices. So that wouldn't be via a platform. That was from dealers as an interface. So what that suggests is that people aren't using those necessarily directly so much as seeing those via a platform, intermediated via something. I mean, that could be anything from seeing them on Bloomberg or seeing prices via Neptune to any other intermediation. But my expectation would be that those prices are coming through, but just not so much directly. Now, we have seen, of course, a lot of interest from buy-side firms in having direct streamed prices for firm prices. And what we'll see as we move on to the trading venues, where we've included these as an execution option, is that actually very few firms are executing against streamed prices today. I say very few. It's a double figure, but it's not a very high double figure. Does that answer your question?
Yes, thank you very much.
Cool, no worries. Okay, so moving on. Yes, which interface do people plan to use? Now, something very interesting here is FlexTrade. FlexTrade has 13% of buy-side traders engaged who plan to use it. Let's just go back a second. FlexTrade at the moment, the proportion of users according to current usage is low. They're not on the chart because the number was low, and just for space reasons they weren't included. But with 13% as a pipeline, they're actually look to be one of the most used EMSs, OMSs potentially over the next few years. So that's a really interesting outcome for them. And we'll see actually that data is then replicated in later questions that we asked. We also have here TrueQuote's GUI, and TrueQuote as a new entrant last year. Again, that's very strong support for them as a platform. I think it's going to be interesting to see how they develop. There are, of course, Bloomberg China Bond Connect there. We're expecting Bloomberg's offering to develop and bloom. We've seen TradeWeb's China Bond Connect being very well supported by buy-side traders, and market access as well. And then quite a long tail. There's 24 interfaces in this list who have at least one or two buy-side trading desks planning to use them. So there's still a lot of diversity in how people plan to access the market. New in this is Symphony Spark. They haven't actually launched in corporate bonds yet, but it's interesting, there's appetite for that. Symphony obviously for those who don't know, is a sort of social media slash Bloomberg-esque type platform launched by sell-side firms initially, and it's going to be interesting to see if they develop an execution function. Okay, again, if anyone wants to raise a hand to ask a question, please do. I'm just going to carry on through here. Okay, market interfaces, then looking at which firms have confidence in these EMSs and OMSs and their use over the next 5 years. Note that these are only standalone, so Bloomberg data for EMS, OMS isn't included here. But we have Charles River has a solid level of confidence amongst the buy-side traders going into 2025. The blue one at the front is 2020, then red is 2022, green is 2025. Symphony Spark as well, some fairly solid interest going into the future there. BlackRock Aladdin, there's an anomalous drop-off in the interim. I personally think this is probably just because people are more able to commit to short-term or longer-term in their minds than they are medium-term. So I think probably it's not that we're going to see a drop-off in use in 2022, just that people are perhaps less certain about how they're going to be using it. And again, FlexTrade here. So in 2022 and 2025, people are very confident they're going to be using the FlexTrade platform. So again, that's interesting. That reinforces the previous question about which platforms people plan to use. Okay. So moving on to trading venues now. We look at which trading venues people execute trades in. This is actually the category which we have most data for, as we started asking this question back at the start of 2015. So we've got 6 surveys worth of data here. You can see Bloomberg, of course, is riding high, as is Market Access. These two typically vie for the #1 slot, and I think in 2019, Market Access was top. So these two are constantly fighting that out. Both of them have over half of the users as major users. So both Market Access and Bloomberg clearly generate a lot of value for the traders who use them because they have a significant number of major users. Got to say for TradeWeb as well, actually, you know, that's nearly half of TradeWeb's users are major users of the platform. So there's a lot of commitment to those 3 platforms. Now we've got, of course, LiquidNet as the 4th largest. That's also been consistent. LiquidNet came in 2015 with relatively low share, and that increased significantly. They have managed to maintain that, so they've done very well. The new entrant here is China Bond Connect at 24%. They weren't on the chart last year. So for TradeWeb to have captured nearly a quarter of traders with China Bond Connect was great work. China Bond Connect. UBS Bondport still maintaining its position very well there, and TrueQuote again was a new entrant last year. They've maintained their position very well and developed some major users too. So I think that's very interesting to see. We also got TrueMid and CanDeal down at the bottom end of that chart. They've actually been fairly consistent in their use. CanDeal is a Canadian specialist bond platform, for those who don't know. Okay. Which trading venues do people plan to use? The numbers here are quite low. They're all in single figures. But we've got Bloomberg China Bond Connect and TrueQuote. Both have good pipelines here. TradeWeb's doing very well, and for the other platforms, as we might expect, LiquidNet, MTS coming in, and Spark as well, Symphony Spark. It's interesting that for the most part, these are largely tried and tested tools rather than being anything new. The 16 platforms mentioned here, several being different offerings from the same firm. So quite clearly, the appetite for interfaces, which was I think around 26, outstrips that of new venues or new data sources for that matter. Okay, let's looking at this historically. Here we can see total users in 2020 on the front, going all the way back to the orange bars, which are 2015. So just to give some context to the data we're seeing today, this gives you an idea of how usage breaks down over the years. The main thing to notice, of course, is that very few venues have managed to break into this market successfully. The ones who have are LiquidNet. At the very start of our survey in 2015 were new, and they've quickly gained market share and done well. TrueMid, which has done very well and has fought very hard to maintain its position in the US particularly. TrueQuote, which has established a differentiated model by offering a crossing platform, which has been very, very successful. Also, of course, LiquidNet with block trading has got a differentiation there, and UBS Bondport, which is the last man standing on the sell side, and has done very well with its agency trading model. Just to check, are there any questions coming in from anybody? Raise your hand if you have one. Otherwise, I'll carry on. Okay, great. Okay, now looking at the confidence in using these platforms in the future, going from 2020 in blue up to 2025 in green, you can see that this typically follows the pattern that we see of usage today. So Bloomberg, Market Access, TradeWeb, LiquidNet, Bond Connect, sorry, China Bond Connect, UBS Bondport, and TrueMid, and then the MTS platforms as well. MTS platforms seeing gradual use over time is going to be increasing. TrueMid and TrueQuote both see rising confidence over time. And we start to see the BGC platforms coming in here as well. What we asked for the first time this year was which trading protocols people use on the platforms. So you'll notice that blue is request for quote, red all-to-all, green bilateral liquidity sourcing, purple click-to-trade, sort of aquamarine is process trades, orange is streamed pricing. Clearly, request for quote is still the dominant trading protocol for the major platforms. What's interesting is, of course, is that in terms of the market share, if you look at how request for quote is used, that's actually pretty close for Market Access, TradeWeb and Bloomberg. But where they differentiate themselves, Bloomberg has a range of protocols that people use, and that pushes it out quite far. Market Access equally has open trading, it's all-to-all platform, and that's the red, and that's very high. LiquidNet, of course, starting off originally as a buy-side to buy-side platform and bringing in some sell-side, it has a lot of all-to-all trading on it and bilateral liquidity sourcing too. So that's very significant. I think another significant thing to note is that smaller platforms typically have a very differentiated offering because there isn't really any room for more requests for quote in the market. There doesn't seem to be much appetite for that. And so UBS Bondport, if you look at that, streamed pricing is actually quite high there. The click-to-trade is quite high there, as is all-to-all. So I think, and then TrueMid as well, lots of all-to-all there. So if we look at the way that people interact with these trading venues, it's quite a telling picture. Please note that in the magazine, you can actually see the stats on this chart. So do go and read the magazine when it comes out next week for more detail on the figures. Okay, so we've been looking at the usage so far, and that's the usage on each trading desk. But this is the vote of confidence. We asked traders which platforms they rated most effective in finding liquidity. And at the moment, Market Access out of 5 got 4, Bloomberg and TradeWeb both got 3, and then Bloomberg Pretrade Data, LiquidNet and Neptune all got 2. So Market Access was actually seen as the most effective in finding liquidity, although it doesn't have the same number of users as Bloomberg at the moment. Those two tend to fight that out though. If we go back to 2018, Bloomberg was seen as the most effective, and again they've both been vying for a number of years on that front. One thing I'll point out here is that Neptune's grown considerably. In 2018 it was just below 1 actually, it was rounded up to 1, and now it's just over 2. So Neptune's been growing quite considerably in terms of its effectiveness. And then finally, we also ask people which group in the market may be most influential in generating new liquidity. Buy-side investors, dealers, non-traditional liquidity providers, issuers, and regulators. The most interesting stat here is that non-traditional liquidity providers, so high-frequency trading firms, electronic liquidity providers, they've been increasing every year since 2016, or maybe 2017. And at 3.4 out of 5, with buy-side investors at 3.9, buy-side investors having consistently been the most influential platform in being able to generate liquidity, non-traditional liquidity providers are really closing that gap. So it's very interesting to see how their influence has increased over time. Okay, so key takeaways for this year. Bloomberg is the most used tool on the desk. Market Access is rated the best at finding liquidity. Most successful EOMS platforms have the majority of users as major users. So if they're successful, they're really well bedded down on the trading desk. Pre-trade data sources that don't have themselves attached to a trading venue, if they're independent, they have really struggled. Non-banks are increasingly significant as facilitators of liquidity in the market. And going back to the point about streamed dealer prices, they're used a lot for pre-trade pricing, but at the moment, not very much at all for execution. Thanks very much for participating.